Hello everyone, welcome to the ichimokujcharts.com daily analysis for the S&P 500 for Wednesday, March the 7th, 2012. Well, a continuation of the trend to the downside today, and the previous day's trading we had a candle with a lower high and a lower low. Today's candle we haven't seen the trend take out the low of the previous candle, but we also failed to take out the high of the previous candle, and therefore we don't have a change of trend, so the previous trend is in force. In bar chart terms we have an inside day, and this is very close in bar chart terms to being a reversal pattern, a hook reversal, and that's where we have an inside bar and a bar which opens towards the low and closes up very close to the high. And that is a reversal pattern because there's a large amount of indecision because of the bar being an inside bar, but also because the market is closed with the buyers in control for the day, and they've shown strong commitment. They've been in control for most of the day, so that does set it up as a potential change of trend. But this is also a potential Japanese candlestick reversal pattern, which is a harami pattern, and that's where we have a largish black body in a downtrend and then a white body which is within the body of the previous candle, and we're just within the body. It's borderline harami, but the sentiment is the same. There is strong potential for a change of trend to the upside. Now, for today's trading, as I've said, we have had the buyers take control of this market. They've made net bullish progress as opposed to the sellers on the previous day, and they've shown strong commitment throughout the trading day. We do have fairly strong resistance overhead that may be a barrier to this market changing trend, and that's around this 1356 level. It's a previous level of resistance, and in this case here we can see these candles where that area has held a support, and the market tested that area on a few occasions, and now once again this area has potential to act as resistance. So if we are going to see a change of trend, we most probably will want to see the market take out that area. We do have resistance above there to the 1370.58 level, then to the swing high here at 1378, and no strong resistance until the market trades up to the round number 1400. To the downside, if we do see the market come off again, we do have support, potential support at this resistance level at 1333, where we saw this swing high, and then potential support down at the round number 1300. Which coincides with this swing low here. Also, that would coincide roughly with the top of the cloud, and as we've seen quite often, the cloud will act as an area of support or resistance. In terms of Ichimoku, the market is overall bullish by trading above the cloud, and still trading above the cloud since this bullish breakout quite some time ago, and remaining bullish in the medium-term time frame by trading above the Kijun-sen. And here we've seen the Kijun-sen act as support for this market. We're seeing today the market bounce off the Kijun-sen and buyers coming in. We tested to that area for the previous day's trading. We had the flat Kijun-sen, price action was attracted back towards there, and now there's strong potential for the market to bounce off there. Technically, in the fast term time frame, the market is bearish by trading down below the Tenkan-sen here, and we've been bearish just for the one day, but we are rallying back up towards that level. Looking at the Chikou span, that's above the corresponding price action, so it's supporting the bullishness that we're seeing in the big picture and the medium-term time frame, but not supporting the bearishness that we're seeing. But certainly this market is set up for a potential change of trend. We are in a first time frame downtrend still, but the short-term dynamics are not supporting that. The buyers have come back into the market. We do need to break this 1356 barrier roughly for the market to make a higher high and a higher low. Next, moving to gold, and here we see a similar situation to the equities market. We saw the very large black-bodied candle which confirmed the trend to the downside for the previous day's trading, and here we have an inside bar. We have a bar which failed to take out the previous low, but also failed to take out the previous high, and raises some doubt about continuation of the trend to the upside. It's a white bodied candle as well, and that means that the buyers have made net bullish progress on the day between the open and the close, as opposed to the previous day's trading where the sellers made net bearish progress on the day between the open and the close. Now, in terms of the hook reversal pattern, it's close to being a hook reversal, although we don't have the market closing up too close to the high. It's not quite as a nice scenario as in the equities market, but the sentiment is the same. We basically have the buyers taking control of this market for the trading day, and in this case being in control of the market for almost the whole trading day. So that small shadow on the top does represent the buyers losing some commitment as they traded up around that area. Now, so there is potential for a change of trend, and if we do see a change of trend in this market, we do have very strong resistance at around the round number 1700. So that will be a potential barrier to this market. Also at this minor low here for this very large candle, which is at the 1688 level, and we can see that the market today, the high attempted to trade up through that level and couldn't quite trade up through there, so it just poked its head above there, and we did see the buyers lose commitment around that level as the sellers lost commitment on this very large extreme range day. So that will offer itself as very strong resistance to this market for today's trading. We can see how the market is developing at the moment. It's not wanting to trade up above that high. In terms of support and resistance as well, we do have potentially strong support at 1667 from previous high, and we can see here where it was previous resistance then turned into support. And also at the cloud, we saw for yesterday's trading the market found support at the top of the cloud, and we can see the shadow on the bottom of this candle where we saw the sellers lose commitment around that area and the buyers come back in. So that's a very strong area to watch, and the top of the cloud for today's trading coincided with the 1667 level. So for tomorrow's trading, we should be watching around there, roughly around about 1670. And that's the thing with the Ichimoku charts. The areas of support or resistance are dynamic, and in this case the area is actually moving up to meet the price action. And it's likely that the market, if we do see any bearishness, will interact with the support once again over the next trading day or so. I've mentioned the 1700 round number, but significantly above there we have this large zone of resistance which was previous support, and we can see here on quite a few occasions where the market tested within this highlighted yellow area, and there was strong upside price rejection from there. In this very large sell-off day, the market traded all the way down through this zone, but the two following days the market attempted to trade within that area and found resistance at the top of it, which is roughly about 1728, 1729, and sold off from there. So this zone will offer itself as very strong resistance, and the Tenkan-sen and the Kijun-sen both coincide with that zone of resistance at 1728 at the top of it. So that will be very, very strong resistance to this market. In terms of Ichimoku, the market remains bullish in the long-term time frame by trading above the cloud, but also bearish in the medium-term and fast-term time frame by trading below the Kijun-sen and the Tenkan-sen. And the Kijun-sen is pointing flat. We can't see it because it's basically behind the Tenkan-sen here, but quite often when that's flat, price action is attracted back towards there. So that does increase the probability that we will see a change of trend in this market. So once again, the high of the current candle at 1688 becomes even more important for tomorrow's trading. So let's watch that area for a potential higher high and higher low. We have had the buyers come back into the market, but also watch around the top of the cloud at roughly about 1670 for the market to find support around that area. Next, moving to light sweet crude oil, and here we see another white bodied candle, a common theme with the equities market and with gold. Previous day's trading we saw a very large black bodied candle with the sellers in control and strongly committed, making strong net bearish progress, and today the buyers have slowed that momentum down. The buyers have taken control of this market and made net bullish progress as opposed to bearish progress, so that's quite significant. The trend, however, still hasn't changed. We have a candle with a lower high and a lower low, so that's quite important for this market. Now, the market over the previous 2 days did find support at the window that was opened a few weeks ago. I've highlighted that quite often as an area of potential support for the market. And the window, basically in Japanese candlestick terms, is a gap, and it's a gap the same as the Western style of gap that we use. A lot of people have the misconception that a window in candlestick charts is a gap between the bodies of the candles. It's not. It's actually a gap between the range of the candles, the same as the Western type gap, and it's called a window. But it does offer itself as potentially very strong support or resistance, and in this case now on 4 occasions we can see that it was tested there and the buyers came in, tested on this occasion and the buyers came in, tested yesterday and also tested down below there today, and the buyers have come in. Now that window is actually being closed by the price action trading down through the bottom of the window there. But significantly, the market has failed to close down below there, so that's quite important. If we do see a close down below there, then the significance of that window will be lessened quite a bit. It already has been weakened by the price action trading down below there, but still not as significant as if the market closes down below there, so we do need to watch that for a close below. To the upside, if we do see the market trade higher, and remembering that we are in a downtrend, but the short-term dynamics aren't favouring the downtrend anymore, if we do see the market trade higher, we have strong resistance at the 106.95 or 107 level, and that's an important level from previous, and we can see here that a lot of indecisive trading around that level previously. Above there, no strong resistance until we trade up to around the 110.45 level, but we do have the Tenkan Sen trading at 107.45, which will offer as resistance as well. In terms of Ichimoku, the market is bullish in the medium term and fast term time frames by trading above the cloud and the Kijun Sen, but bearish in the short term time frame by trading above the below the Tenkan Sen. The Kijun Sen is pointing flat, and we can see that price action was attracted back towards there, which is what happened, and we now potentially see the market bouncing off this window that was open once again, and perhaps testing to higher levels.